Good afternoon, everyone. BC Richfield coming to you live from London, back in the office, away from the time in Suffolk, which was lovely, which means we're back to the full setup, which means hopefully we can get through these a little bit quicker for you guys as I've got all my screens back available. So how is everyone doing? Great to see a load of you online already this morning. Thanks so much for turning up. As always, a big shout out to you guys watching this live. And also a big shout out to everybody that's watching this on recording. So today, what do we want to look at? We've obviously had a nice little bit of a pump. It really nicely coincided with my time away, which, do you know what loads of people have been saying? Doesn't that wind you up? It really doesn't bother me, guys. I know people think that I'm joking when I say it, but it really doesn't. You know, obviously the market trades both ways all the time. We can trade ranges, we can trade trending conditions. You know, thankfully for me, my brothers and sisters over at the Nest, there are some exceptional swing and trend traders there that have caught so many amazing trades. So yeah, they've been absolutely killing it, which just inspires me even more to get back and get at it. So big shout out to everyone, Dan, Marta, Risk Taker, everybody else that I know is listening on the stream today. Huge shout out to you. So before I waffle on too much, let us get this full page and let's run through just generally what my kind of thoughts have been. What I'll probably do is actually just clean this up. Let's start with a nice fresh chart. Grab these into a group. Let's have a look at that. There we go. So I want to start with Bitcoin. Obviously, really good place to start. Let's just take a look at the weekly. Craig Parker, good morning, mate. Welcome back. Double R, great to see you. You, Greg as well. Good morning. Burned. Brilliant. Got all of the crew. Lots of regulars on here now, which is awesome to see, guys. Really do appreciate your patronage, as well as everybody that's new. You know, guys, with anything, if you've got any questions, if I'm going too quickly, absolutely just pop something in the comments and I'll get round to that. If not, I'm not going to focus so much on the basics on this. I actually want to get a few different assets covered for you today as well, and kind of gauge whether you guys want to see a bit more FX stuff on here as well, and equity markets, you know, like the ES and NQ or S&P 500 and NASDAQ. Or if you want to focus on a few more alts and bits and pieces, going to take a look at BTC and ETH and then see where we go from there. Gold, Nipar, good morning, good afternoon, wherever you are in the world. So Ken as well, hey buddy. So what we're doing here, right? All I've done is I've got this on here. Don't ignore this at the moment at the bottom. This is just a really cool indicator by a guy called Dr. Fuse. You can find a link to his stuff through my Twitter. No affiliation with him. Just think he's a really cool trader and makes some really good indicators. But the main thing about this, right, is looking at timings, which we're going to go into as we go on to the lower time frames. So with anything, the way that I'm looking at the market is I'm thinking, okay, where's the resting liquidity? Where are the big players going to want to get in? Where are they going to want to get out? All right. And for that, we're basically focusing on these key levels, right? So to give you just a very quick example of that for anybody that is new to the stream, if we're taking this as an extreme, okay, this high here, then that's of interest to us before this price action develops. This is of interest to us because anybody that was short here, and we can see people, there were a lot of short sellers in this, right? Remembering this is a weekly chart, then my belief is that, okay, well, if you were short up here, where are you realistically, or if you were short here, where are you going to put your stop loss, right? That's the most commonplace, if you like, that everybody, you read it in every trading book, every course, you know, target either the price swing high or, you know, the swing high on the move before the breakdown. So when price returns here, what we want to see is a couple of things. We either want to see price make a strong impulse move through the level, spend a little bit of time above it. Yeah, now this is difficult to convey on this because unfortunately the nature of the brush on the higher time frames. But if we had a big impulse move up, what I'd want to see is ideally a retest of this level, right? And then you would want to see price just spend a little bit of time, right? Then ideally a kind of liquidity sweep move, right? Obviously, this would happen on a lower time frame, but to give you guys a kind of gauge the concept, yeah, and then that's where I'd be of interest, right? So the reason for that is if we see a strong move up, quite often it represents that there's buyers stepping in. Now, when we get these impulse moves up, the mistake people often make is buying, FOMOing in high up into the move, right? So people go, okay, well, all right, I've seen the move all the way up to here. I'm going to jump in here. And obviously a lot of people that buy at the top, all right? Only to find that more often than not, you get this reverse move where the market goes against you, right? Let me just make that a little bit bigger. Comes back down to a key level before then going the other way and then going in the original direction. So how many times have you either happened to you or you've heard someone talk about it and say, do you know what? I thought the market was going to go up here. But I got in here and then I got stopped out and it went up. It's all nonsense. It's manipulated. And it probably is manipulated in truth. You know, like the biggest accounts, the biggest money, whether you think of them as hedge funds, whales, smart money concepts, however you visualize that, you got to be thinking the smartest and wealthiest players in the market want to do something really simple. They want to sell high and they want to buy low, right? So a nip part, I find the opposite happens. I open a short only to then get stopped out. Exactly right. And they're these liquidity moves, these swing failure patterns, right? And that's what we're going to look at as we go down onto the lower time frames, right? But this is a high time frame example of that very move, right? What did we have? We had a key level run. What does this do? Anybody that's short here, yeah, it triggers their stop loss, which is a buy order, right? So then you generate all these buy orders. Breakout traders that are going long here, yeah, also trigger buy orders. If you've got enough money that you want to place these huge institutional orders, you need to generate these buy orders up here, right? And sometimes I find the best way to kind of visualize that is thinking like, okay, well, the move above this level here, we're going to do this in green to show that these are buy orders, right? Now, if you're smart money, if you're a hedge fund, however you want to visualize it, right, then you've just taken out an all-time high. There's a lot of risk jumping in here and going long, especially up here, right? But if you want to get these orders filled to go short, yeah, if the whole market wants to go short at the same time you do, or a lot of the market does, and you start to jump into a move here, right, then the slippage of that order is going to really pull your order down. It's going to, you know, they'll be targeting places like this, right? Why? Because that's a key area where you would expect there to be the stops in the opposite direction, right? So liquidity to this side, to the sell side, right? So they want to sell here and they want to find buyers lower down. That's how they're making their money. So they don't want to risk this slippage, right? What they want to do is they want to take the liquidity that's up here, yeah, and then they want to use those buy orders to fill their sell orders, right? Because they want the market to go down and they want a lot of buy orders. So work out a place that you can convince the market that everything's going up, fill all those buy orders with sell orders, and then you get your big position size filled to the downside, right? So hopefully that makes sense. That's all I'm going to cover in terms of that, just because that's the premise of my trading takes all of that into account, right? So for me, I'm looking for swing fails. I'm looking for a level to get run. I'm then looking for a clear low, which for me means it needs to be flanked by two higher lows, right? I'm then looking for a breakdown of that level. Yeah, a close below, which you can see we just about get here. Yeah, which is that close there, showing me that we flipped that level, and then I want to see a retest, and then I'm trading it down to liquidity at the opposite side. Okay, so my trade would be from here to here. Now, we're not going to execute on a weekly time frame, but that's just to give you guys an example of what we're going to look for on every time frame, because for me, trading is all about building our bias. All right, so bang, 9 minutes in, let me pour me tea. Back to the Yorkshire tea after a little break away and spending some time with some Twinings breakfast tea, also a very good option. So what are we looking for here? Well, weekly, we now want a narrative. Now, obviously, I appreciate on a weekly scale, we're not always going to be getting these liquidity runs. So we see one here. Yeah, we get a high because it's flanked by two lower highs. That gets run. Yeah, you get confirmation that the trade breaks down. And then we're looking for entries in here. However, obviously, on a weekly scale, that is a lot of data. Yeah. And sorry, and good morning, bud. Question here from Double R, and a really good question. So before we move down this, do bigger players avoid slippage by using limit orders as opposed to marketing in? Well, no. So really, it's a really good point you raised, because obviously on a limit order, what you're doing is you're adding liquidity to the order book, right? So you're a maker, not a taker, henceforth why you get the more attractive fees. Market orders will just simply market enter you at the best available price. But think of it like this. On any limit order, there's only and same with market, there's only a certain amount of buyers and sellers at every level. Yeah. So when we're And let's use this as an example again, right? So we're short from up here, yeah? We've seen this localized liquidity sweep. We've noticed that we've taken out key highs here. As we said, we monitored this level. We've got a breakdown. We've got our retest, yeah? So we're short here. Now, you see by this quick move down, yeah? Now, within that, there will be, think of it always as buyers and sellers, yeah? So you're basically looking to sell into the market, which means you need people on the other side of your transaction. So the slippage comes from not having enough of the orders. So when you get the markets move very quickly, yeah, and you're trying to jump into them, if you were market entering, then your orders will just slip down to the best available price, right? Now, let's say that price was 55,350. Well, when there's no sellers at 55,350, it's looking for sellers lower down, lower down, lower down. That's how you generate slippage, right? Now, what you want to do is notice that when we ran this level here, yeah, price didn't go down straight away, did it? Yeah, came up, teased with this area, even had this little close, this weekly close above it, right? Now, the idea is to induce lots of people to go long here, yeah, so that when the sell orders are filled, and they will be done so at a very high volume, there's a lot of buy orders to fill them, yeah. All these buyers here, all these buyers here, all the buyers that break out above here, and all the buy stops generated by people getting stopped out from shorts back here, right? And you notice this high volume candle here. This is all those orders getting filled, then it's engaging. Now, the risk for retail, people like us, and I'm absolutely retail, I'm in the same boat as all of you because I'm not a hedge fund playing around with billions of dollars, right? Then the risk is this is where you get your confirmation, but this is where the market's already moving, right? So if you have a limit order placed, right, the risk is that you don't get your order filled. So what institutions will do is they will have a number of different orders at a cluster of levels to try and get as much fill as possible. If they don't get that fill, the order doesn't get placed. If they take the risk of a market order, their orders will definitely get filled, but they can't guarantee what price. Yeah. So when we're looking to enter a trade, and let's use this as an example, if we're entering on this black line here, our risk is above this high here. Yeah. You allow obviously always just for a few pips extra, but just for semantics. And our first target would be here. Yeah, this naked low, because that's where we assume there's enough liquidity, yeah, in terms of sell orders, yeah, so that they can sell back to the market to fulfill this trade. Now, if they entered here, they've got a 1.5 risk to reward, which isn't great anyway, but just humour me. However, if slippage takes your order down to say here, all of a sudden it's 0.85 and there's nobody who's going to take that. What they want to be doing is ultimately knowing that if price breaks down here, then the extended target would be a minimum of these equal lows down here. You would be aware of this, but they want their risk to be as small as possible, yeah, and the return to be as big as possible. But once you start allowing for slippage, maybe the entry comes to here. But if you're buying in when the market's moving and you're market ordering, your slippage can really, really hurt your trade. All right, buddy. So I hope that's clear. It's a really, really good question and something that people definitely need to consider when they're entering trades, right? So you're better off, the way I like to do it, even using that as an example, is if this was my entry line here, the retest of this low, then when we close below it, I'm loading up my limit orders here and sometimes a little bit higher as well, right? Now, I never use more than 2% risk on an account. Often it's only ever 1%. But if I wanted to layer in here, I wouldn't do 1%, 1%, 1%. I'd do like 0.3, 0.3, 0.3, always making sure the entire position was only 1%. All right. So I hope that makes sense, guys. So now we're going to run some quick top downs, right? So this area here is of interest. Why? Because it's the consolidation before this really big move higher that hasn't been retested, right? There has to be an assumption that there's orders down there. So we want to make ourselves aware of that. We had reactions, incidentally, at this consolidation here. Yeah, we can see the line going across the screen. We can see what an important role that played. And then also at this consolidation here as well, which acted to support up this move. Now, something else we want to be aware of is always market structure. Okay, so at the moment, what's quite exciting in terms of a bullish perspective is looking at the fact that we've taken out for the first time in a while a key swing high. Right? So as we can see here, this is what's getting people bullish. What are my concerns? Well, originally it was this, which it still is, right? So for our weekly levels, right, we're going to mark these in. And all I'm going to do is I'm going to put just a W on them, right, and we'll center these. All right, and we'll do this with all of them, because then as we break down the different levels, I find sometimes it's a good way to consider them, right? Because we don't want to lose focus on our high time frame. Yeah, a lot of people do forget the high time frame bias, jump down onto the lower time frames to execute. So in terms of weekly levels, why are we interested in these? All right. So double R, you're very welcome, mate. So we're interested in these because of the reactions that we get when we get there. Now, does every swing high or swing low on a high time frame cause a reversal? Not necessarily, but what we know is that if we're trading from any of these levels, yeah, then when we interact with these levels, we get a reaction, right? We got one here, for example, right? Weekly level, see how price came into it, then we get this wick back down. Why did that happen? Well, it doesn't mean the market's going to reverse there. It might do, but the chances are that if people want to sell back to the market, people are long from down here, yeah? Buyers down here want somewhere to sell. And the more, the larger amount that you have, the more contracts that you have, the more that you need buyers on the opposite side of the market. So if you're a buyer here, you need to sell to someone higher up. Well, how do we know that there's people willing here? Well, it's a key swing high. So we make an assumption that, first of all, like we said before, above this level, yeah, are sell orders. Yeah. Why? Well, for two reasons. We do those in red. One, because people that were short here, yeah, are going to want to buy back. Yeah. So if you want to sell into that, you want to be selling into this area here, right? So this is your buy side, meaning that when price comes into here, if you want to offload, yeah, you need people to buy from. So you're going to get a reaction here. You're going to fill your contracts. Then if we look at this in the same vein here, yes, so I think I cocked up how I've said that actually. I really didn't make that very clear. So we want, basically, when you're a buyer down here and you want to sell higher up, yeah, you obviously need other buyers to buy back from you, right? Which is why it's called buy side liquidity if you study people like ICT. Now, it seems counterintuitive, right? But basically, what we're expecting here is that there's stop losses up here. There's other breakout traders that are going to go long. But the people that were long down here are going to want to de-risk here, right? Meaning that even if the market continues to go up, they're going to want to sell off some contracts, right? Take some profit, which is very, very important. So we can see how we got the reaction here. We got the reaction here. Now, why am I really monitoring this level? Because if I wanted to see this on a weekly scale, to gain acceptance, you'd want to see a weekly close, right? So what we're interested in is that initial reaction, and we want to trade that on the lower time frames. And we want to do the same with other key levels like the daily. So let's look at some examples very quickly, right? So we have this swing low here, yeah, flanked by two higher lows. What happens when we interact with that level? We have a reaction here, and the market actually reverses in this instance, right? What happens when we come along and we take out any of these? So this is a swing high here, right? We get a close above it, we get continuation, right? It's a very simple theory, but quite a robust one. What happens when we interact with this swing low here? Yeah, we see we dip into that. Price has that natural reaction. That's what we want to trade. We want to find high probability trade setups that are based on price interacting with swing highs and swing lows. See this one again here. No close above, market reacts, right? So we're going to look at how we would trade those on the lower time frames. But just for the sake of this, we want to mark up our key levels. So for me, the levels I'm most interested in at the moment are these, right? So these are our weekly levels. We're now going to drop this onto a daily, right? Now we're saying to ourselves, okay, well, daily levels we can see is the same as our weekly level here, yeah? And let's even use this as an example, because I know this is a level that a lot of people, myself included, were looking at in terms of getting some kind of reaction, yeah? So we see we have a level here. Now we're going to do this there. And in fact, actually, we're just going to label this up as our daily level, right? So look, price came up to here. Nothing about this candle on a daily scale said that this wanted to reverse. You see the move here You see the powerful move here. You've got a bit of a wick, fine, but you've got a lot of body. You've got a lot of volume. Look at these little candles here when price is consolidating. Small bodies, some of them with long wicks. There's not a lot of volume. The volume is in the bodies. These aren't the moves to fade, right? These big, powerful closes. Let's look over here, right? Big sell-off candle, next sell-off candle, just as potent, right? Now, when we have this sell-off candle here, this isn't the position at which we're thinking to be going long. What we're saying to ourselves is after any kind of large impulse move, we're expecting some kind of consolidation, right? So again, keeping it really, really simple, then you'd be looking at this here and you would say, okay, we have this impulse move up, fast move back down, right? Impulse up, impulse down. What's our expectation? Is that we have consolidation, right? Now, whether you're looking at this in terms of consolidation, you're then looking for, if you're looking at this in terms of methodology of something like power of three, then you would look at it like this, right? So you would have consolidation, manipulation, and then distribution, right? Or expansion, meaning that you're looking for price to consolidate. You then typically get a fake out in one direction, again, to induce buyers or sellers. And then those orders get filled and you have these big aggressive moves in the opposite direction. Yeah. So it would be like this. All right. Forget the colors. They don't really mean anything. It's just to show the different stages that we have. But you don't always get this manipulation, right? So if we use the same premise here that we're looking at, price came down, we had our drop. Yeah. And then if we're looking more towards the bodies of the candles here, which is what I like to measure, and we take that across and we use the same color scheme that we've got above, this is our consolidation. Price faked out above here before nosediving, right? But then we didn't get the fake out from these lows, right? We actually just got straight in here to distribution, right? Or expansion. Okay, but the premise is the same. What you're talking about is when you look at these faster moves, you're then waiting for price to consolidate before it makes another move. So you can see it absolutely everywhere. Moves up, comes back down. That's a deeper retracement. But all of these kind of areas here is price consolidating. It's taking out the previous highs, but it's not taking out the lows. So all we're doing is we're plugging those principles in to our charts every day, right? So let me just clean this up. So we've got our weekly levels. We've also got daily levels to consider as well. So one thing that we've got coming up ahead of us here is we have this daily level on Bitcoin. So we'll draw this across. And then we label this up as our daily level. So if we believe price is going to run up here, yeah, and at the moment we're getting a nice strong candle here, right? Then what we're looking at are a couple of different things. The prior day's high, right, which would have more weight to it if it was a weekday, right, because traditional markets don't trade over the weekends. So then I would mark this up as prior day's high. And then we have our prior day low, all right? Now, obviously, while we're on the daily as well, we're looking here, the daily open, right? And you can always find that, just hover over the day. And then up here where you've got the numbers, make sure you're hovering over it. You look at the open, right? Which in this case was 22,703.5. And then you want to make sure 22,703.5 is there. Now, this is actually our weekly open and our daily open, right? So that's what we want to pop on there. Now, technically, what this is creating for us is this is creating some key targets. We're expecting liquidity resting above here because it's prior day's high, and liquidity resting below prior day's low. All right. Now, we're very much in bullish momentum and market structure, right? Now, considering that that's on the daily, that's not to be taken lightly. So we always want to consider that and factor that in. The other thing that we're looking for is our kind of macro outlook, which we don't want to be blinded by, but we do want to take into account. And, you know, we want to take into account things like the DXY, what the dollar index is doing, how traditional risk assets are faring, okay? But for me at the moment, I'm looking at this and saying like, okay, well, what have we had here? If we're telling the story of price now that we're on the 4 hour, we could see that we had this low taken out here, right? This low here was swept. Prices come in, hit this consolidation, Yeah. Now it's swept this low, which makes Sunday's low down here. But look at the reaction of this candle. Yeah. So when the buyers stepped in here, price has been forced all the way up here. And this wick down here shows us that they're coming into the market here. So at the moment, we're saying to ourselves, well, where's any untapped liquidity from the lows? And it's obviously this level, prior day's low. And then we've got this swing low that's formed here on the 4 hour. Right. And all you can do is you just jump on these and then you can say H4SL just to highlight the fact that it's a 4 hour swing low, right? Now, in terms of liquidity above, we're looking for the prior day's high. So the fact that we've had this 4 hour close now, right, above our weekly and daily level, there's an expectation in my mind that we're probably searching for liquidity higher up, right? Now, price could stop and break down here, and if it does, fine. If we get back under this level, let me just zoom out for you a little bit so you can see it, because obviously these levels get pretty high pretty quick. This is our weekly level, also our daily level. We can see the interactions we had with it. When we interact with it here, we had that immediate sell-off. We had that powerful close above, and then we got the opportunity to trade it up for the next few hours. Now we had this big bearish engulfing candle here that's taken price back down, but price really failed to kind of sell off aggressively below this level. It's kind of stuck around here. It shows a little bit of indecision with the level. But the fact that we've had this impulse move higher, we've now got back above this level. If we hold this on the lower time frames and we're trading within our kill zone, then our immediate target becomes these highs, right? So then we're saying to ourselves, okay, well, we're above the weekly open, which is bullish. We know where liquidity is to the lows and also where our risk is. Yeah. And what we're saying is, okay, well, price doesn't tend to just reverse in the middle of nowhere. Sometimes it does. But typically it wants to find liquidity first to fuel a move in one direction or the other. So that is what's on our mind here. Now, as we drop to the hourly, okay, and we're looking at structure. Now, I don't trade weekends, but I'll show you how these trades were factored in for Saturday and one down here that was for Sunday. But in terms of structure here, we're coming up. We've dropped down, set this lower low. Yeah, we've still got a lower high. Now we've set a higher low, and the break of this high here on this scale, yeah, gives us a shift in market structure. Now I'm going to make that line a little bit thicker there, because realistically, if you're bullish on this, you want to see this hold. You really want to see price come in, maybe dip below it a little bit, generate some liquidity before it pushes higher. Now, there's nothing else really of major significance there. You know, we would probably look to this as well in terms of having some orders. If we're looking at this as an order block, okay, and we're saying to ourselves, okay, well, this was the up move. We then had this impulse move lower, yeah, and then price really started to sell off here into this move. Well, there were obviously orders in there because people were selling, and there'll be people trapped on the wrong side of that as well, yeah. So that's something we want to be aware of. We see price sell off, retests this area, which gives us extra validation that there's orders in there. So sellers, price sells off, traps people, price gets back to close to as possible to that area, more sell orders, so people sell off again. We've then had this interaction, and we've had a reaction, and now we've had another one. So what will make us more positive or put probability on our side that price is going to move up from here? Yeah. So what would make us think, okay, well, if we hold this area, yeah, we're either going to do one or two things. We either get back below this level, retest it, and then we sell off, knowing that we've got targets along the way down into these lows, right? Or price holds here, yeah, gets back up, gets into a bullish formation on the lower time frames, and gives us a trade opportunity into here, yeah. So what would that look like? We drop ourselves onto the 15-minute time frame. I'll leave that there for a moment. Now, I want to show you this up here because when we ran this key weekly level, I expected price to break down, or at least for people to sell, right? To close off some positions. So how did that trade look, or how does that trade look? For me, I'm applying the same principles to the lower time frames as the higher time frames, right? Although my overall bias is still bullish because we're in a high time frame bullish structure, right? Something that I have to be aware of here, and you'll see that I've got a 15-minute order block marked out here in the grey box as well, is that as price is coming up here, I'm looking for price to break down, right? Now, we're in the New York PM trading session here, right? What we notice, and I love trading this session, is we've come up. Now, if we look here, this would be the London trading session here, right? So London here, we've got 8:30 in the morning London time, or pre-market from 7. London comes up, sets this high, right? So that's the high from the London trading session. That tells us that there's some liquidity up there, right? So that's the London high. London high gets run up here, and then price starts to break down, right? So what we're looking for when this happens is we're looking for a break of structure. Yeah, so we've got our high, our low, higher high, low, yeah, lower high, but then a higher low. Only here, when we break down, we can see we get the low, lower high. This is where we take out that low, right? Now, what I'm saying is we've had a reaction here, price has broken down. It's now breaking down again. In this particular case, the entry, right? I'm looking for one of two things. I want to see the structure break, yeah, which happens here. And then I want to see an inefficiency on a lower time frame, or even on this time frame, which is a fair value gap like this one. Zoom in for you. So you see price sells here, right? And it creates this inefficiency. Now let me mark this up for you very quickly so you can see that, which is between that candle and that candle. All right. Let's mark that in a bright orange. Nope, we've already on orange, aren't we? Blue. So the reason that I didn't want to take this trade, and I didn't take this trade, right? This is purely a trade that I set up before the markets. I don't typically trade weekends. It was the last day of my holiday, but I liked the setup, right? And I like monitoring what price action does because you can always review it when you review your journals, which is really, really important. So when we got this move here, price broke market structure here. Yeah. So for me, we're looking at our market structure shift. All right. So as we break structure down here, what I wanted to see was more of an impulse move, right? So you see we got these long tail wicks here. Now, price came back, perfectly retested our fair value gap and sold off. When we got this impulse move lower and we took out this liquidity, on the higher time frames, it was quite clear to see that the likelihood was that we were coming down to test this level, or at least look at the liquidity that's below these lows, right? Liquidity resting here, here, here. So there's a chance that the price comes down into this level. So this is known as a breaker entry, right? And again, I'd always recommend people. ICT coined this a long time ago. I certainly studied this off him many, many years back, and I have done under other people as well. But my belief in this, from my testing that I've done, is that if we're looking to short this, we're looking for the highest volume down candle before the manipulation or before the move higher, which is taking out these highs. So this is what you'd call a swing failure pattern, meaning here's the swing. We break that swing, trapping people to go long, and then break down, right? Now with the breakdown from here, this is the candle I'm interested in. So that's what represents my entry. But I was waiting for this impulse move lower. So if we get it here, this would be our entry line. So we see, okay, fine, we got that, we came back, but we actually tagged in over here. Yeah. The reason that this is here is because I actually put this stuff on the chart before the price action plays out so that I can take images of it, share it with mentoring students, share it with people at the Nest so that they can see, obviously, that, you know, doing this kind of charting when we've got all of the data can make it look too easy, and it's not the case. It's doing this stuff before the price action's developed and then monitoring how it plays out, or obviously trading it. So I hope that makes sense, because in terms of principle of what we're looking at now, we're talking with the data here, is all we're doing is working out the same levels of probability, right? So we see that price is holding here, right? In the same way that when we came up here, yeah, we took out this level. Now, this was yesterday, right? So this is the other one that I wanted to share with you. When we've broken back down below this key weekly level, right? The thick red line here. Now, as we've broken down to here, look at this massive inefficiency that we left, or fair value gap, yeah? Now, like we were talking about before, price often likes to come up and refill these. So what we'd be looking for here is we're looking for breakdowns of structure. Yeah. So we have this big move down. This is telling us that the market's looking to sell off, right? Or that's how I interpret it. Now, as price comes up to rebalance this inefficiency, we get a 5-minute bullish structure. Yeah, because we're low, high, higher, low. Break of this high takes us bullish, right? So then what we're looking for here is a breakdown the other direction. So on a macro scale, on a higher time frame, this is bearish. This is our high, low, lower high. So we're looking for a break. But on our 5-minute, we want a clear breakdown. Oh, I always do that, end up hitting the space bar. Hang on. It takes me to some random chart. So here we go. So here, got rid of our fair value gap, but no problem. We can put that back in. Oh, bear with me 1 second, guys. I do not know why TradingView is being a little bit twitchy. We will get this fair value gap drawn. Here we go. Right. Oh, it's back again. Right, perfect. So, fair value gap, price comes back up. What are we looking for? Like we said, it's showing weakness. We've got clear downside targets, yeah, which we've already labeled up on the higher time frame. We have our high. We come down. We take out this low, yeah, come down here, set this low, set this high. For me, what I'm looking for here is the breakdown of that level, which I would call a breaker line, right? But it's basically just a confirmation of structure. And again, I want to see price go through this level, yeah? So we get that impulse move, we get that big level down there. You can either enter on the breaker line, stops above the price, swing higher, right? Because what we're saying is, okay, if this is really the motion, the price has come back up, taken out, stopped here, and is now willing to break down lower, that's what we're looking for in the move, right? So we're looking here, right, for the flip reverse of this over here. So what we're saying to ourselves is, okay, well, if there's strength here now, yeah, price is now impulse move higher, right? Let me just get rid of this for a second because you guys know what we're looking at. I'll leave the target line up there. All right. So impulse move higher. That impulse move, right? What does that tell us? That tells us that there's buyers there, right? Because people that have stepped in, there's at least a reasonable amount of buyer volume coming in. What else have we said in terms of similarities? We have our fair value gap, right? We have price come up, it was bullish. It's now on a lower time frame, broken down, right? So what would we want to wait for? Well, we want to wait for price. Let's do it like this so it's a bit neater. Yeah, it comes back up. Yeah. We want to get into a bullish structure, yeah? So we want to see that bullish. Now, when we see that and we get our market structure break, yeah? So that's our market structure break and our breaker line. We can use a retest of that to enter longs as long as the risk is there, yeah? Or we can use it as a gauge to say, okay, if price has impulse and moved higher, if there was no manipulation down here to allow for a breaker, then we'd be looking for a fair value gap. So in this impulse move higher, let's imagine we've left a fair value gap here, then we'd be looking to trade our limit orders down to here, risk below here, and then trading it up to this target. Obviously, always making sure that we've got a good risk to reward. All right, guys? So that's my current thinking on Bitcoin. Let me show you ETH very quickly, and then I can see here Dan P. BC, if you get a chance, take a look at XRP. Had a good pump this morning. Interesting your thoughts on where it could be going. Yeah, absolutely, mate. We'll take a quick look at that in a moment. So ETH, let me just zoom out on this. I've been doing a lot of work on ETH recently. It's been a really, really lovely to trade. Again, always the same principles, but what you'll notice about my charts here, like with ETH, are the ranges, right? So I get a lot of people ask me questions about these ranges, right? So in my opinion, how I look at ranges is exactly the same way that I was telling you guys before. You see an impulse move, a consolidation, and then price at some point breaks out of that consolidation. And quite often what you get is a breakout or a fake out from one side of the range before it moves to the next. So what I look to trade quite often are ranges. Now, on the hourly or the 30 minutes, those timeframes suit me because I like to day trade, right? You can obviously do it on higher timeframes as well. But what you'll see here is, and let me just move this just to a standard range fib. Now, impulse move higher, right? Now, I'm looking for a clean high and then a clean low. So once this candle closes, I can see that I've got a clean high and a clean low, right? So all I've done here is I get my fib, I anchor to the high, drag it down so it's here with the low, right? And for me, this makes up my range, yeah? So how do I play this into what I'm talking about now? Well, this is my bias, right? What you'll notice as I zoom out on here very quickly is as my actual trading chart, you can see all my daily levels on here, right, on ETH. Now, obviously, I clean these charts up and bits to share with you guys normally, but when I'm trading these and you can see different trades and data and bits and pieces in here, then this is what I'm looking for, right? When we're taking out key levels, see this weekly low? We ran that weekly low here, right? When we had this bullish reaction, well, then I'm expecting price on a weekly level to hunt down the next weekly liquidity. And that was here, right? That doesn't mean we're always going to get there, but that's what I'm looking for. And even on this level, what I'm doing is I'm breaking this into a range, right? So you'll see this here. Now, how does this help me? Helps me massively because when we broke above the 50 line here, we got a strong close and this candle retested. We then look left and see this inefficiency, this fair value gap here, where there's there's hardly any orders. Price moved there so quickly. We expect price to rebalance this. So on a high time frame, it helps with our bias, right? So I'm expecting price to come up here. Obviously, I'm not trading this on a weekly scale, so I want to make sure that I've got a plan in place. So until we hit this level, which is why I'm a bit on the fence at the moment, and I'll tell you for why, because there's a lot of orders here. I'd like to see a strong daily close above this to think that we get continuation. And then if we're looking higher up, we're looking for continuation higher, where do I think that is? Well, here. Right? Now, I'm pretty sure if we take a look at that and we go to a weekly, this is a weekly level, right? So we've got a weekly high here. So we want to pop that in. Make sure that's on 10 as well, or that will play with my OCD. So on a weekly level, we're looking for liquidity to be taken, which it was here, and then we're targeting the next weekly level, which is here. If we close above this, then we target this. If we close above this, then we target the liquidity resting above here, right? We're then just breaking that down onto a daily scale. Now, remember, it's all relevant to the type of trader you are. If you're a position trader, you're using higher time frame charts, right? Monthly, weekly, daily. If you're a swing trader, you're using slightly less than that, maybe like daily, 4 hour, and executing on a 1 hour. For me, as a day trader, I'm trying to get a high time frame picture, but then I need to decant that onto lower time frames in order to work out the price action and also the execution, right? So henceforth, why when we come into this level here, we tagged it here, I was feeling that we're going to get a correction, right? So how does that look? Well, we've drawn out our range, right? Now, I've dropped this down onto a 15-minute chart. Why was I short with these two trades here? You'll notice this one, right, was a stop out at evens, which is fine because it was kind of feeding the market out a little bit more in terms of the strength of the reversal. Also, we're not going to be right all the time. This here, which you can see, guys, I'll drag it across so you can see the interaction. This is where the level got tagged. This is where we failed to close above it. This is when our range formed. That was our high. This was our low, right? We see our midline, yeah, which is the EQ or the 50%, yeah. So we see here with the demo account that we were putting this on, we took a $25 hit there, right, which was our stop loss plus our fees, right? But then on this one, we made it back with a $123 gain, right? That's because the theory was correct here, but the execution was off, right? So as we go down, I was expecting a corrective move here. We showed weakness. We came up into this order block. We were failing to break above the 50% level of that order block. Price then broke down here on the lower time frame, gave us the opportunity to short. However, what we notice with a range is set from the high to the low. Let's just make this exact, because that's just a fraction off. Right? What are we looking for? You hear me bang on about this stuff all the time. Always into extremities, yeah? So either a key high time frame level, a daily or a weekly level, sometimes a 4 hour level, yeah? Or a key high time frame order block, or we're looking for levels of our range to get tested, which we call deviations, which you'll all know from SZ, who is another guy I could not speak highly enough. SC, Trader Dank, EXO, in terms of range trading. Razoon, my boy Razoon, he's just a gem. Unbelievable with a range, understands that. Study different people that are experts in these things, right? Now, your strategy will determine whether you take trades at the EQ or not. For me, what I'm looking for in terms of a range is how much range do I have to play. Top to bottom of this range, I have 4.2%, meaning I've got 2%, from the low to the mid and from the high to the mid. So I'm more than happy to trade that, But what I'm looking for are deviations, meaning that I want to see price break below, but show that it's not willing to go any further. Now, if price broke below here, if we get our tool out here, price broke below here and then closed below here, set that low like that. If price came up, came back below that low and retested it, that is where we can get trades triggering prices lower down, right? What you'll notice with all of these is they're quick, sharp reversals. Price doesn't really spend any time out of here, right? There's no indecision. Price just comes out, comes back down, comes back within the range. So then on a lower time frame, which I'll show you in a second, we'll look to do the setups, right? So hopefully that makes sense. Couple of quick questions, and then I'm going to smash this out, show you the executions, and then we'll look at a couple of alts that people have asked for. So Craig Parker, therefore, is the weekly liquidity more of the target than daily? Does that only for the timeline you're trading? Really good question. For me, it's if we're hitting a weekly level on whatever time frame I'm trading, then I'm expecting more weight to be given to the higher time frame levels. Daily is the main one for me because that's what most of the institutional traders will be positioning on. So when we interact with the daily level, that's my key. Most of my trades, like you'll see from this ETH chart, and let me just see if I just show this to you very quickly, guys, before we go into this. Right? Let me show you all my daily and weekly levels for trade, right? None of these are cherry picked. They all exist. They're all actual swing highs and swing lows, right? So, same principle. What you'll notice is, and let's just start at a random point so you can tell I'm not cherry picking, So, swing high. Why? Because it's flanked by two lower highs, So, key high, what happens when we interact? Price comes above, fails to close above the initial high, breaks back down, which we look for on a lower time frame, seeks liquidity where? The next available low, which was here and then here. What happens when we trigger this low? You see, fail to close below it, generate liquidity because we've taken it from below these lows. Price then comes up. Where to? It's searching for liquidity, right? So it's searching for this liquidity up here, via these inefficiencies, rebalances this. Doesn't always have to get there straight away, But what we can look for here is we get this deviation, price comes back down. As price starts to build up, it leaves this daily high, or this key high here. So we're then looking at that for a reversal. But let's look what happens, Price trades from daily liquidity, deviates, sells off, Takes out the daily liquidity, then searches liquidity higher up, then sells back off. What happens when we find support down here from these lows? Price comes up and takes out the liquidity of these highs. Where does it then search for? The liquidity of this daily low. This daily low deviates, takes out the liquidity of this daily high. We're moving from high to low, low to high, right? Until we get something like this. We take out this daily high with a strong close, right? Price holds this level. Yes, comes back down, closes a little bit, but there's no breakdown, right? Then when we get a strong close above this high, remember this is the breakout high. We get a strong close above this here, then this is where we're starting to favor long setups based on confirmation. Ideally, you would want to see a retrace, but like anything, you don't always get it, right? So that's where execution comes in. So does this work for scalping? Yeah, absolutely, across different time frames. So let me just cover a couple of questions just very quickly, and I'll show you how I would look to take these setups. And then one from RRBTs, you trade with the same strategies and principles trading Forex and stocks, or do you approach it differently? No, absolutely, mate, very much so. You'll notice with Forex and indices that you tend to get slightly cleaner price action. Low liquidity sometimes on certain crypto assets can mean that the market movements are slightly more erratic, but always the same principles, buddy. Yeah, absolutely. Again, what I would always say is, though, make sure that you are always testing this, right? Always test. Okay. Risk taker, 59 people here. Blessed PC's great explanations. Thanks so much, guys. I really do appreciate it. Like I say, this is just information and knowledge I've studied over years and years of being in the markets, right? And none of these principles and ideas are my own. They're just what I've put together from studying other great traders, yeah? And, you know, people that I'd always recommend studying and trading, people like SC, EXO, Crypto Burb, guys at CMT level 3. I learn new stuff from him every day. As I do my trading team over at the Nest, you know, people like Trading Tank, people like Bast, Razoon, you know, QBS as well, who does all of our amazing graphs, is actually a really switched on trader, the same as your NLP coach. Jimmy, you know, unbelievable. All the guys over there, but also others. Just find good people. ICT, obviously, take stuff with a little bit of a pinch of salt sometimes, whether you believe the concepts or not. He's got very great understanding of price action. So let's say we've got 9 minutes left in the show. I just want to show you this example. So do a test for yourself, guys. If it's something that interests you, go on to any chart, mark key swing highs and key swing lows on a daily scale, just to show you there's no cherry picking, right? As you can see on here, to define a swing high, it has to be just, let me zoom in on this one so you can see it really nice and clearly, right? So just for example, this one here, yeah? This is the longest candle that has the highest high. It's flanked by a candle to the right with a lower high and the candle to the left with a lower high. For a lower low, yeah, or for a low, you want to see the middle candle flanked by two higher lows. Then we're looking for what happens when price interacts with those levels. And I think you'll be really, really surprised. So just with that in mind, I know someone asked in terms of, okay, what can we do in terms of moving these to lower time frames? So I've had a couple of requests. Let me go back to the initial ones first, and I'll take a really quick run through. I know somebody asked for, hang on, XRP was the first one, wasn't it? Let's take a very quick look at XRP. Here we go. I should literally might have thought that I'd paid you to go into this one, because we did this a few weeks ago, couldn't we? And we can see a little bit of a similar kind of theory that played out quite well on this, right? We were talking about the idea price is getting held up in this fair value gap. We fail to reclaim this. We look for a breakdown, retest here, and then we sell off to the liquidity of the lows residing here, which at the time was this low. Yeah. So we look for sweeps, we look for liquidity to get taken, and then just sweeps to opposite liquidity. Okay. So we've actually got a few annotations on here. So we can see we've taken out this key level that we were talking about. We've come into here, didn't get the close, got the close above, the perfect retest. Now price is running up. In terms of targets, this fair value gap here, this inefficiency is drawing price higher. But actually, if we think that this is really going to take out, if this is really searching for liquidity on a daily scale, then we've got our daily level here, which we want to be aware of. That's a long way to run up. However, there's no real orders in here, so price could easily make a move up higher. There's obviously a large order block candle here. What we would do is look to decant this down and make that a little bit more accurate, find the real source of the move. When actually you see all these consecutive candles here, yeah, when we've got these together, this is all one strong move higher. So there's a chance, if we leave that there, that's what's drawing price up. But even that's around here, right? So I think we could see some continuation here with XRP. Now, in terms of how we would look to trade this, a couple of people asking just for some trade examples. The lowest time frame I want to execute on is the 5 minute, right? But what I'd be looking to do here is I'd be looking for, we're holding above this level. I'd want to be looking for a retest. I'd want to see a sweep, yeah, so liquidity taken, and then I'd want to see market structure shift. Now, I typically don't like trading outside of the latest being the New York close, which for me, I look to close down around about 8 p.m. Yeah. So this one here wouldn't have been as relevant, but this is the kind of thing I'd want to see, right? A purge lower and then a market structure break above. However, what we got here was really nice. We got a retest of this high time frame level within the New York PM session. This represents our raid. Yeah. So a raid, for me, how I interpret a raid, let me just mark this up. is a liquidity sweep of a historic level. Hang on, it's the wrong one. So what I mean is we've set this low back here. This has been swept, showing that we've raided previous liquidity. Also this line here, right? And then what we have here is what I would refer to as a sweep, which is where we've taken out the immediate liquidity here, right? Then how we would look to trade this, we want to see a clean structure break to the upside, right? So what do I mean by that? Well, and again, this is what you need to kind of work through for yourself, guys. But for me, I'm using this as a clean. This is a clean and clear swing higher. So this is my market structure break long, right? Now, what am I looking for here? Well, what I want to see in an ideal world for me is I want to see this impulse move higher, have a retrace, yeah, into a fair value gap. Or I want to see a breaker, right? If we're saying, look at the equal lows that we have set here, yeah? Now, if we see a series of equal lows like this, then I'm looking for this to be the purge of that liquidity. So price has purged below here, come back above. If I was looking to enter this on what would be known as a breaker, I want to take the volume of these candles here. Okay, because why? Because this up move, this is the up move that led to this manipulation, to the generation of liquidity here. This up move caused breakout traders to enter in the wrong direction down here, probably. It also triggered stop losses of anyone that was long here with their stops below here. So when we get this impulse move higher, yeah, showing us the market's ready to go up. Also, higher, higher low, higher high. This is our market structure break. Then we can look to take our entries in here with our stops under this low, and then we simply targeting the liquidity above, which obviously the cleanest of which would be this. All right. So that's what I'd look. Breaker entries tend to be quite popular, but you do need to make sure you get this manipulation first, that you get a clean out of either a clear swing low or clustered liquidity there. Okay. So that's how I would be looking to enter. In terms of what price is doing at the moment, we can see that price is kind of being held here. Yeah, so I'd be looking for the start of the New York trading session, which for me kicks off in about 30 minutes. And then I'm saying, okay, what is price action doing? How's it holding? In an ideal world, if I want to be long here and say target the high side of this fair value gap, I want to see these lows taken out. Yeah, so price to come down, take out liquidity, get back into a bullish structure. Once liquidity is taken, we either look to enter when it breaks structure back to the upside and gives us some confirmation. Same as we did down here, guys, right? I'd be looking for this impulse move. So we did exactly the same. We took out a key raid here on historical liquidity. Prices then come up, set this high, purged local liquidity below here, impulse move breaking structure, enter on the breaker, or if you had a fair value gap in here, yeah, which you could see you had between there and there, you could draw that across and use that as your entry as well. But that's what I'd be looking for. I wouldn't want to jump into a move here because fine, price could just keep pumping higher from here, right? No problem. But I don't want to be part of that move because I'm not getting myself a good entry or good risk or reward. All right. So can squeeze in maybe just another one very, very, very quickly. So what did we have? Someone else came on here and asked for Gala as well, was it? Let me just very quickly look at Gala. Also, guys, I'm going to be back Wednesday and we're going to cover alts and everything in a lot more detail. So we'll actually make that a request show. So if you have got any, please do pop on there. Just for now, I'm just going to do a very quick 2-minute wrap up because I've got other commitments at midday or at 1 o'clock, which is now. So let me just very quickly look at that. BCDG. Very quick look at Gala. Again, you can see a lot of similarities here in terms of what we were looking for. We had this bullish close above here on a daily scale, which gave us a bit of hope. We had this fair value gap down here, right? And we wanted to see this respected, which we've not really drawn into here now. Now we've started the new week and we're having this nice move higher. What we want to be aware of is where could price be targeting. Now, for me, We've taken out this. It looks like we've got that there. We've already run the liquidity above those highs, which caused that rejection. So actually, probably this level here, we can see prices having quite a nice pump now. Now, if we start to reclaim this level with a strong close, we've got these inefficiencies in here, and then really we're targeting these highs up here, right? So in terms of levels, we want to see this reaction here at 0.05701 and then 0.07285. And in terms of what we would look for, very similar to how we've had when we have an initial reaction with these levels. Yeah. Like we can see here with our red box. Price comes in, gets that immediate rejection. We look for our market structure breaks to trade down where to opposing side liquidity. All right. At the moment, we can see that things are quite bullish. We've now got ourselves back above this line again here. Yeah. And again, you can see in a very similar way to as we've done here. When we had this move, it happened just after. We took out the liquidity from these lows here with this sweep. Yeah. Sweep. Price comes back above. What happens? Price comes down, takes out liquidity, form this high here, which actually need to zoom in a little bit for you guys. Yes, price comes down, sells off, sets this high, which we get a strong close above. We get a nice retest of it here. So this is where we'd be looking to take longs, targeting here, here, and here. We would monitor these. Obviously, we can see with the benefit of hindsight that we came up, took out this here, didn't quite take out this high, but now we've had the retrace and we're now pumping again. I would be looking for this level here for some kind of reaction. And I think if we get a strong close above here, yeah, and start to consolidate below, I think once we reclaim this level here, we'd look for that little sweep of the lows to get back above. And then we'd be looking to long that into our secondary targets, which are up here. All right, guys. So look, thanks so much, everyone. I know just a couple of minutes over. I'm going to jump onto another call now with one of my students, and it's always been a pleasure to be back. Feel really good, buzzed and invigorated after a week off. So let's get on it. Let's keep learning. Guys, contact me on Twitter. Come and check us out over the Nest. You can get free offers to come and trade with us. The team have been absolutely killing the trades. We've had an insanely good few weeks. If you're interested in that, you can find the link to buy a bit below, or you can come and grab yourself a free trial at the Nest, or just come and grab me over on Twitter. All right. Thanks so much, everyone. Have a fantastic week. Happy Monday to you all. And I'll catch you again on Wednesday at midday.